from the NYMEX. This is Futures Now, the most important 15 minutes of your trading day. Welcome to the show. I'm Jackie DeAngelis. Joining me today from the floor of the CME, Scott Nations. Here at the NYMEX with me, Anthony Grisanti. Ask and you shall receive. We are going to be talking to Peter Schiff today. I know a lot of you wanted to get his take on the market post the Fed. We didn't get a rate hike. What does this mean? Peter is actually joining us now via satellite. Always great to have you on, Peter. And I'm going to start with my opening question. Are you ready to take a victory lap here? Is that what you're going to declare victory because Janet Yellen didn't hike rates?
Well, I don't think Janet Yellen ever intended to hike rates. That was the point I was making the last time I was on. They used the excuse of global markets or the global economy, but that had nothing to do with the Fed's decision. That was simply their excuse not to do what they never had any intention of doing because they can't, and that is raise interest rates. We are stuck at zero. This is a gigantic bubble. The last thing the Fed wants to do, unfortunately, is prick it, but the air is coming out all by itself. Just keeping rates at zero is not enough. It's not enough to support this market. The market, unfortunately, is going to want another dose of quantitative easing, and that is exactly what Janet Yellen is going to deliver to the detriment of the real economy.
Okay, other analysts out there are assuming or supposing, that is, that she might deliver a rate hike, and she might do it before the end of the year. We still have October. We still have December on the table. Having said that, do you think those are, even a remote possibility, in your opinion? And if not, when is this QE4 coming?
Well, look, sure, it's a remote possibility. It's possible the Fed could do that, but I don't think it's likely. If the Fed was going to raise rates, why didn't they do it already? Why not? If they didn't do it in September, what's going to change in October? All we get is more economic news that's bad. Look at the Philly Fed numbers that came out today. Awful. We get one awful data point after another. This economy is rapidly decelerating. The Fed just doesn't want to acknowledge that its monetary medicine didn't work. In fact, the patient is now sicker than ever, so it wants to maintain the pretense that it can raise rates, but it doesn't want to actually do it because everybody will realize how weak the economy is. So it doesn't serve the Fed's purpose to actually raise rates. What serves their purpose is to pretend they can raise rates, to pretend a rate hike is right around the corner, but keep coming up with one excuse after another why they're not doing it.
Scott Nations, question for Peter. I know you're just chomping to get in here.
Well, Peter, my question is, if Fed Presidents Lockhart and Bullard, who this week and last week came out and said that they were actually in favor of a Fed rate increase, are speaking for at least some members of the Open Market Committee, why is it that you are so certain? What's the data that says that the Fed won't increase rates in either October or December?
Well, it's possible that these dissenting opinions maybe are genuine, or maybe they're just out there as part of the show, part of the bluff to create this theater like there's some kind of tension at the Fed. It's open mouth operations, but look at all the data points. I'm not making this stuff up. Look at all the numbers that keep coming out. I'm not talking about just the ones from today, but look at the manufacturing numbers, look at the ISM numbers, look at industrial production numbers, even look at the consumer spending numbers, confidence numbers. Everything is going down despite 0% interest rates. All we've got for the Fed to hang its hat on are these phony employment numbers. Yes, we have a low unemployment rate. Big deal. Nobody's looking for work. They've all left the labor force. They've all settled for part-time jobs. Look at the home ownership rate at the lowest it's been since 1967, and that's only because old people still own their homes. Look at the home ownership rate among people in their 20s, 30s, 40s. We've never seen anything this low. Meanwhile, rents keep going up. Consumers have no purchasing power. They have lousy jobs. They're drowning in debt. This economy is a disaster thanks to the Fed.
Our economy...
Peter, there...
Go ahead, Scott.
Well, Peter, there you go again. Because the most important... Everybody agrees, except for you, evidently, that the most important data point, and the data point that the Fed is focusing on, is jobs and the unemployment picture. And so I can understand why you want to discount that, try to explain it away, but that's what the Fed is looking at. And we also know that Janet Yellen's favorite personal data point is the JOLTS, the job openings number. And unemployment, the unemployment rate and the JOLTS data have actually been very good. And Lockhart and Bullard both spoke to that. So how can you explain away the one piece of data that's most important, but that disagrees with your point of view?
Well, Scott, those numbers have been superficially good for years, yet the Fed hasn't moved. I think they know that it's only superficial. Look, if you look at the real unemployment numbers or what's going on in the job market, the job market is destroyed. You have all these part-time jobs, service sector jobs. We've lost good jobs. We have the lowest labor force participation rate since the mid-1970s. This is not a healthy jobs market, and employment is a lagging indicator, not a leading indicator. People don't lay off in advance of a recession. They start firing people as a result of a recession. So by the time you start to see the jobs data really, falling off, it's too late. We're already in recession. The recession may have already started. Remember, the Great Recession of 2008 started.
It's never been better.
Let me shift
the unemployment rate has not been better in a decade.
Peter?
But look at the labor force participation rate. Look at the number of people working part-time. And a lot of these jobs that have been created don't really exist. The government makes them up in the birth deadline.
Gentlemen, just for a second. I think we're losing a little bit of focus here because we're really getting into the weeds on the data. Yes, Janet Yellen has said that the Fed is data dependent and what matters is what is happening here in the United States. But during this last press conference and during that statement that was, where we did not get the rate hike that we were expecting, she also mentioned the global economy. And that was really the first time that she did. The Fed is really worried about what's happening in China. If that subsides somewhat, it could potentially set the table for that rate hike to come. And it may not be in 2016. It could still be 2015, rather. It could be early next year.
That is not what the Fed is worried about. I've always said they're going to look for an excuse not to raise rates.
So is the Fed lying to us about what they're worried about, Peter?
Yes, look, they could be worried about a lot of things, but they have no intention of raising rates. And so they have to come up with an excuse that's palatable. They can't tell the truth. We can't raise rates because the U.S. economy is a disaster. We've inflated a bubble, and we can't raise rates. I said this 7 years ago when they lowered interest rates to zero. I said this was a huge mistake. They're stuck. They're in a monetary roach motel. They're never going to be able to raise rates back up because the easy part is cutting rates to zero. The impossible part is lifting them back up again. We can't do that because this economy is more addicted than ever before to cheap money.
Peter, it's Anthony Grisanti over at the Merck. All right, so say everything is exactly what you said. We have 0% rates. We're looking for maybe another QE4. How do you fix this? That's the question I want to ask. How do you fix this economy? How do we get off zero rates? How do we not have QE? Go ahead.
That's a good question. See, eventually, the foreign exchange markets are going to get wise to the Fed's con. They're going to figure this game out, and they're going to realize that the Fed is never going to deliver on this promise, that rates aren't going to go up, that the balance sheet is never going to shrink, that it's going to grow in perpetuity, and then there's going to be a currency crisis. This dollar rally is going to reverse. The dollar is going to sell off. It's going to take the bond market with it. It's going to put tremendous upward pressure on consumer prices. The Fed is not going to be able to pretend there's no inflation, and then their back is going to be to a wall. They're going to have to raise rates or destroy the dollar completely, and that's when rates are going to go up. But it's going to hurt a lot more because the Fed wouldn't have acted to preempt a crisis. They will act in response to a crisis. But if they did do the right thing now, and if they did raise rates, unfortunately, we will have a worse financial crisis than the one we had in 2008. I am not happy about that, but this is the reality. This is what the Fed did. They created the last crisis, and then they refused to let the market restore balance and solve the problems that they created. We kicked the can down the road. Now we've run out of road. The can's too big. We can't kick it anymore. We're going to have to deal with this reality.
Peter, you're describing a very dovish Fed scenario here, that they can never raise rates and they have to prop this economy up. Let's assume that you're
No.
correct.
They don't have to.
Let's assume that that's correct.
They should let this.
Then why isn't gold rallying? You've long been a champion of gold, and it's stuck here just over 1,100. Gold's doing nothing. A dovish Fed is good for gold.
Because most people think like Scott. They don't think like me. Most people believe the Fed. They think the Fed's going to raise rates. They believe Yellen, just the way they believe Greenspan. In the late 1990s, there's a bubble in the dollar, and so gold is depressed as people are looking for tighter monetary policy at the Fed, which would really be unprecedented. If Janet Yellen actually shrunk the balance sheet like she's pretending she's going to do, there's no precedent for that. We've never had that at the Fed. They always expand the money supply. They don't contract it. They don't start selling treasury. So the market is bracing for this. The emerging markets are bracing for this. Commodities are selling off. The whole world has been fooled by this Fed
Okay, so the whole market is bracing for this. The whole market is bracing for this, and you're still willing to sit there and say Janet Yellen is lying, and the whole market is believing it, and you're the only one that has it right?
I'm not the only one, right? I'm certainly in the minority, but the most people have it wrong. And this is not the first time that I've been against the consensus. and it's not going to be the last. And I'm usually right. You know, and generally when everybody believes one thing, they're usually wrong. You know, people get trapped in this bubble and they can't see it because they're trapped inside it. And this is a big bubble,
Peter,
and the bigger it is, the more people get taken in by it.
Okay.
Peter, you did a wonderful job of deflecting Jackie's question about gold, because you told a bunch of people to buy gold at 1,700. You told them to double up at 1,225. Here, the S&P is down 35 handles today, and gold is down $8. And where is it at now? Well, it's at 1124 right now. So my question is, you say that everybody thought that the Federal Reserve would raise rates. And again, if price is truth, and we can look at a chart of the Fed funds futures for the entire year of 2015, this shows that it wasn't until September, until the September meeting, that we really had an opportunity, at least as far as the market was concerned, to actually increase interest rates. Prior to the September meeting, the market was absolutely certain that an increase was not going to happen. So you're certainly welcome to your own opinion. You're not welcome to your own facts that everybody counted on a rate increase before September. So how about this? Let's either revise history or convince us about the future, but let's not do both at the same time.
All right, first of all, the last time I was on the show, it was well before September, and you were saying everybody thinks the Fed is going to raise rates by the end of the year, and this was way before September, and I said everybody was wrong. And look, when the year began, everybody was divided between will the Fed move in March or will they move in June?
Peter,
I said they won't move at all. Everybody has been looking for a rate increase. Yes, I was on this show a couple of months ago.
You're declaring victory. You're declaring victory in the middle of the seventh inning. And let's remember, you said there'd be QE4. The Fed not raising rates in September does not mean you were right.
I didn't.
Scott, let Peter respond. Peter, I do have to wrap this segment up. So final word to you, and then we'll move on.
I didn't say there'd be QE4 before September. I just said I didn't think the Fed was going to raise rates in September or any time this year. And Scott said I was crazy for saying something so outlandish. And yes, I've been telling people to buy gold since it was under 300.
QE4.
No, go back and listen to what you said. But no, well, but I was telling people to buy gold when it was under 300, and it's still over 1,100. Gold has outperformed the U.S. stock market since I made that call. Yes, gold is off the highs. So is the stock market. Gold is down less than the stock market today. I still think it's going a lot higher. And probably Scott's not going to buy any of it. But you better go back and look at what you and I said months before September. You were 100% certain the Fed was going to raise rates by the end of the year. And you're probably wrong.
They
didn't raise it in
next
September.
time,
You were 100% certain there'd be QE4. You were 100% certain that there'd be QE4.
Not this year.
Next time we have Peter on,
and Scott,
we will have tape.
I predicted QE3, QE2, and QE1. Where were you, Scott?
Peter, I apologize, but we really do have to go move on, get to the trade. Great having you on the show. We will have you back on again. Guys.